Well, we like to hold as many shorts as we can, but we hold shorts to make money, not to have them offset long positions. And in the case of our shorts at the moment, Coca-Cola is the other short beside Kogan, and that's a stock that really is suffering from consumers drifting away from its product, and particularly the younger generation, not brought up as much on the soft drinks and the fruit juices because of the high sugar content, which is they've been shied away from, their parents didn't encourage them to have. Those older people that used to drink it so much also, as they get older, and it's a problem that's going on across not just society in Australia, but the whole of the Western world, increased rates of obesity, diabetes. People more and more are also shying away from using those carbonated soft drinks that have sugar in them. And even the ones that don't have sugar, where they've tried to use non-sugar products to sweeten it, people are very wary of them as well. So we've seen carbonated soft drinks drop in volume by as much as 5% per annum over the last several years, and that's a very bad trend for Coca-Cola. They've tried to expand into water, and that worked for a while, but barrier to entry in water is pretty low, and that has become more and more fragmented, and they've had to fight harder and harder for market share. Offsetting that, they've got businesses in Indonesia and Fiji that are going fairly well, but ultimately don't offset what's going on in the main game. Well, Kogan's an incredibly interesting case study. You've got a business that is an exceptionally good business that's been growing itself very, very quickly, despite the fact that people have been feared about the entry of Amazon. And as a result, the stock price was under the pump for quite some time, but as the numbers came through, it exploded and got to a very high multiple. I think we're getting, was well above 40 times at one stage. The behavioural signals that were sent by the management, of course, were very, very poor, in that after making a couple of announcements, they then tried to offload about 10% of the company, and the market reacted very badly to that. We saw that as a very strong signal, particularly only being about a month out from the end of the financial year, and we turned around and we sold our stock, and of course we've made a fair bit of money on the short. We're at the stage now where we've closed that short out. The stock is now around about the $5 mark or so, and as a result, it's just not as clear-cut anymore as a short. The business is still a strong business. It might not have been growing quite as quickly as it had in the past or as people would like it to, but it's still growing very, very strongly. And there is a price for everything. So we're in that stage now as we head into the Kogan result of looking at where the price is, and at some point it could become compelling again as a buy, or we might miss the boat. It might come out with this result, might surprise positively and run away, and we don't get the chance to buy it.